Well, hello everybody, and welcome to what is now episode 7 of Conversations on the Couch here at Empire. The scale of funds that we manage here at Empire Financial Group and the collective reach of the investment committee that we've assembled here at Empire means that we have investment opportunities presented to our clients that often aren't available to other advisors on retail investment menus. And it also means that we can negotiate terms at a very favourable rate for our clients to access some of these unique investment opportunities. What it also means is that we have access in many cases to the people at the very top of the organisations that we work with the chief investment officers, with the portfolio managers who are actually making decisions within those investment companies and within the investment portfolios. So it's a very unique opportunity that we have, and we enjoy sharing those insights together with our clients and our broader network. Today I have the pleasure of welcoming to the couch Michael Skinner. Michael is the Managing Director and the Chief Investment Officer of Blackwattle Investment Partners. And within our portfolio we have the Blackwattle Large Cap Quality Fund, which we've now included in the Empire portfolios for just a touch over 12 months. So I'd like to welcome Michael along. I'm particularly pleased about this interview today, and it's a little bit of a longer intro. We'll get to you, Mike. It's a slightly longer intro because I'm particularly pleased about the way that this partnership was formed, and I speak about some of those unique opportunities. And Blackwattle came to us a little bit over 12 months ago as an emerging fund manager, a fund manager that was starting up as a new entrant, but with a depth of experience and talent that had been developed from a range of portfolio managers coming from other more established and well-known fund managers. Given our ability to deploy capital quickly and the relationship that we had with some key people within Blackwattle meant that we could come to some very favourable terms for our clients and establish that connection early on and be an early supporter and an early backer of Blackwattle. What makes me really proud about that is that we could back one of those emerging fund managers, but what it also means is that the win for our clients wasn't only on those commercialities, but I'm really pleased to say that in that first 12 months of being in our funds, that the Blackwattle option that we have was the best performing Australian equities manager in that portfolio. So I think that's a tremendous outcome and a tremendous story. So welcome along, Michael, and thanks for coming along.
Thank you, Ray. It's great to be here.
Great.
Now, and thank you for the support as well. That early support is very much valued to us and to our business. So thank you.
Great. It's been a tremendous partnership. I guess that early support probably leads me into the first question, and that is that being an emerging player presents lots of opportunities. It probably also presents lots of challenges. So I guess maybe share with our viewers what are some of those opportunities and what are some of the challenges that you face as an emerging fund manager compared to some of the more established players.
Yeah, it's a good question. Let's talk about the challenges first. In our view, the barriers to entry in funds management are relatively low. You can start a fund and go out and try and build a track record, but the barriers to success are getting higher and higher in the industry. It is complex and costly to do investment, distribution, compliance, governance well. And the challenge for new entrants is to have all of those capabilities with the right caliber people to execute for clients. So for us, we solve that problem by getting some support from early backers, both in our capital structure and in our funds, and raise some capital to make sure for our clients we do things to the very best that we can. And that was important to us, and a key challenge that we identified early and overcame. So that's on the challenge side. On the opportunity side, we had the opportunity to do things differently. We had effectively a blank sheet of paper, and we spent almost 3 years drawing on our experience, designing the company and our alignment structures. And the opportunity is to do things better, in our opinion. So at the heart of our business is alignment. It's what we hold most precious. We will always put our own capital, our own personal, our family's capital into the funds next to clients. And we're very proud of that. We've now eclipsed over $15 million of our own capital into our client portfolios next to the client investments. So alignment is what we hold most important. There's no personal trading in our business as well. We think that's a conflict and a distraction. We only allow ourselves to be invested in the funds. By doing that and putting our own capital in, it really focuses our attention on what matters most, and that's the client. So we have the opportunity to do that well. We've also constrained the capacity of our funds. If you manage too much capital in a given asset class, you can mathematically deteriorate returns. The trading cost or friction of managing excess capital, it leads to negative outcomes. So we've also kept our funds smaller now and in the future to prioritise performance of our funds rather than just gathering assets for the sake of it.
Yeah. The personal trading piece, I know that's something that Blackwattle is very vocal about. Just quickly, can you probably elaborate a little bit more on that and what that then means for investors in your funds?
Yeah, look, it's something that we have a strong opinion on. What it means is when you're personal trading as a fund manager, you're investing a client portfolio in a certain way, and you're spending time and energy running your own portfolio or trading stocks in parallel or on the side. In our opinion, doing that is a conflict. You often non-congruent outcomes with the client portfolio, and it is a material distraction as well. In some cases, it can be very time-consuming, and it can take away a manager's focus on what's most important, that client fund, in preference of their own wealth or own wealth generation. So we don't think it has a place in our business, and that's why we've eliminated it, and we've taken it a step further and mandated that we all put money into the client portfolio to align ourselves better.
Yeah, and I guess that's the opportunity of having a blank sheet and creating this thing by design and having everybody aligned from the very beginning within the fund. Yeah, great. There's different types of equities funds that focus in different areas. The term quality is used a lot in equity investing. What does quality, and what's your definition of quality at Blackwattle, and why is it so important?
Yeah, we have a fundamental view that we don't try and time market cycles or market regimes, so we don't want to time if growth's in favour or value's in favour or momentum's in favour. Some people may be able to do that with some degree of accuracy, but we don't believe it's repeatable. Whereas we're just trying to find high quality businesses, the very best businesses in Australia and around the world, to build either diverse or concentrated portfolios of great businesses. So our definition of quality is very much that. It's a business with a clear competitive advantage that you can articulate. It's aligned management that have delivered success, and it's buying these companies at the fair price. So it's really three core things. It's business advantage, management quality and alignment, and the price you pay for an opportunity.
It's very closely aligned to us here at Empire. I think we probably feel the same way about our business, and it's about aligning with businesses that are articulate in what their value proposition is, who separate themselves from the noise and have a very clear direction on where they want to be, and are playing that long game that you're paying a fair price for. And I think that's something that we've got across the rest of our portfolio. We're unashamedly conservative in that we're not looking for short-term wins or short-term gains. We're looking for that long haul and making sure that we can provide that sustainable and repeatable level of return and capital protection back to our clients. So that's a very strong alignment that we have.
Those words, sustainable and repeatable, are really core for us as well. The best businesses compound their advantage over time. They continue to surprise positively on the upside, and they just compound their advantage year in, year out. We're not trying to shoot the lights out, but they just every year grow and sustainably deliver to shareholders. And that's what we're trying to invest in and build our business to be like as well.
There's been an argument for a long time between the respective merits or otherwise of passive versus active investing. We believe, particularly over these last few years, that active managers, where there's been a lot of uncertainty and a lot of volatility in the market, have definitely demonstrated their value and their place in portfolios. And I'll say the 12 months that we've had Blackwattle in our portfolios, I'll say being the best performing of the Australian equities options that we have in there, has demonstrated that value of that active management. It can be challenging, though, for fund managers to continue to provide those sustainable returns above the index in the long term. So what makes you confident that your funds can outperform the index over the long term?
Yeah, it's our entire job is to try and beat our index, do better for our clients than the market will deliver. It's a focus on a few key things. It's when we identify a portfolio team or a new strategy, we spend a lot of time with that team on the consistency and repeatability of their process. Does their process take out biases? Is the process to deliver alpha repeatable over the very long term? So understanding the fundamental process of an investment team and their style is critical. And then in equal importance is character and culture to us. We actually hold character equal in weight to ability. We're looking for extremely driven individuals who will back themselves with their own capital, and at their core conduct themselves with humility. It's that those character traits of drive and humility to know when you're wrong and you need to make a change in your investment decision making. Those character traits coupled with a consistent, repeatable process is what gives us the confidence that our funds should deliver above market returns over the very long period of time. Taking that one step further, the alignment structures are powerful that we've built into the business. The fact that we put in our own capital. The thing I haven't mentioned is that everybody in our business is an equity partner. So they all own part of the business. For many of us, this will be our last careers into the very distant future. We are passionately focused day in, day out to deliver returns for our clients. That alignment focus is something that we hold very dear and we think is quite unique to our business.
Okay. Any other reflections over this last 12 months, this journey? Anything you'd like to share with our network and with our clients about the experience? Something that maybe was unexpected?
No, not unexpected per se, but it's how you started this conversation for us. It's really partnering with the very best possible people who share our investment beliefs, philosophy, and our focus on character and culture and focus on trust. All of those things, those partnerships, whether it be internal or with our clients, are what we continuously try to replicate every single day. So I think the surprising thing, to answer your question, has been the really great support we've got from our shareholders, from the industry, and from our current and emerging clients that they really resonate with what we're trying to do, and that's trying to do funds management better for the entire industry. And that's been a nice surprise.
Wonderful. Well, it's been a pleasure working with you over this last 12 months. And it's been a pleasure having you along today at the Empire offices. As I mentioned, this ability to have access to the people at the very top of the fund managers that we work with gives us some very unique insights, and that's something that we do enjoy sharing with our clients and with our network. Obviously, if you have any questions about anything that we do here at Empire, our investment philosophy, and how we may be able to assist you, please reach out and we'd be happy to assist.